It's about that time of day again, boys and girls, 7:35 Eastern Time. Welcome back to our crude oil morning prep. We're going from the screen to the floor this morning. My name is Joseph James. I'm a technical analyst from my office here in Los Angeles. I've got my computer screens running, and I'm going to be analyzing crude oil from a technical standpoint. With me today, I've got Marty Errico from Traders Audio. Marty's got his feet on the ground on the NYMEX exchange, and Marty's going to provide us with a very unique spin. Along with my screen prep, Marty's going to give us a prep directly from the NYMEX exchange, giving us some what I think to be very unique and very critical information that we're going to use to make some profit this morning. So once again, I'm Joseph James from School of Trade. My technical analysis is going to begin with a top-down approach, starting with daily charts, weekly charts, moving all the way down to a fast 5-minute chart. And I'm going to look to analyze the overnight session and London's trading session. And if you've been watching each morning, I'm very accurate at anticipating the direction between 8 o'clock and 10 o'clock. We're looking for high percentage trading opportunities starting at 8 a.m. Eastern Time, and I've got some charts here that I think are going to lead the way for us. But after I'm done looking at my charts, I'm going to bring in Marty Errico. Marty provides a very unique approach. I personally have been in this business for over a dozen years, and I've never seen another unique way of looking at this from screens now down to the NYMEX floor. I'm sitting here in my comfortable office chair, and Marty's on his feet all day, braving the elements in the pit, and he's going to be talking about what he sees directly from the exchange floor. A very unique and very accurate morning prep this morning without any further delay. Let's jump right into some charts. Now, as I said earlier, I'm going to start with a top-down approach. I love to look at charts because charts to me make all the sense in the world. And this daily chart is such a great example of how. Now let me set the stage real quickly here. Daily charts, keep in mind, dailies, weeklies, even some of the slower hourly charts, 4-hour charts, are really going to be used for just telling a story. These daily charts, weekly charts, these slow anchor charts for intraday traders, for all those traders who go home flat at the end of the day. For intraday traders, these daily charts are only used to tell a story. What does this daily chart tell us for a story today? Well, it's very easy to see that right now the door is wide open for both the buyers and the sellers. Take a look at today's daily candle. And we can see here, remember, electronic trading. Now, Marty will start at 9 a.m. and go till 2:30. But for all of us screen traders out there, we trade electronically. And this electronic market started at 6 p.m. Eastern Time last night, right? 6 p.m. to 5:15 p.m. today, we have the electronic trading hours. That means this daily candle has already started. Now, we'll let Marty talk about the actual pit or the floor session levels, but for us on the screens here, what do we see? First of all, I see a doji. Second, I see an inside bar. And those two clues tell us. Inside bar tells me we are still within yesterday's trading range. And you'll notice that the story that this is telling us here, if you recall, big gap down last week, finished up the week, gapping up, right? So we gapped down, reversed all the way back up, right back to where we began at the top of the wedge. And now here we are sitting here with a doji inside yesterday's range. That to me tells me we have two-sided trading, indecision. Which way do we go, boss? Which way do we go, right? I always imagine that chicken with their head cut off, running around both left and right. Nobody's in charge yet. So daily chart sets the stage. If I looked at my daily chart, I would say we're trading sideways here this morning, two-sided trading. Let's take a look now and zoom it down. Let's look at a little bit faster time frame now. Let's move from that daily chart now to a 4-hour. Now, the 4-hour is a fantastic chart for blending those dailies with intraday charts. As I said earlier, the daily charts aren't going to give us the exact price levels to enter and exit, right? Now we move a little bit faster and we start to put the pieces together a little bit more. What do we see here on this chart? Well, we can see that test of 97. We can see that very easily. But really important, though, what do we see now? We can see price has pulled back, and we now test our trigger zone, and this trigger zone below us is considered support. What this ultimately tells us is that we have a potential price reversal to go back higher. which of course will support that sideways price action we saw on the daily, or a close below 94.85. If we close below this trigger zone, now we know we're bearish. The 4-hour chart does a great job at showing us that price at this time could really go either direction. If I see a close below 94.85, that will be a bearish tone and we will be selling short. If I see this enter into the trigger zone, reverse, and then bounce right back out, a close back above 95.38, and we are bullish. The 4-hour chart does not give us any major clues as far as what's going to happen next. Let's see if we can drill down a little bit further. We know we're two-sided on the daily. We know we're two-sided on the 4-hour. Oh, this is not going to help. This is not going to give us any more confidence going in one direction or the other. What we can see here now is, here's a 60-minute chart. Now, a 60-minute chart, you heard it from me, is one of my favorite anchor charts. The 60-minute chart is possibly one of the most important anchor charts for an intraday trader. If you're going home flat at the end of the day each day, these 60-minute charts, these buy and sell zones are crucial for us. A break above, a break below, a close above, a close below any of these levels is a huge bullish or bearish clue. What are we seeing here? Well, once again, there's more fuel, pardon the pun, there's more fuel on the fire for sideways price action. We can see support levels below us. We can see resistance levels above us. Very easy to see here that if we don't have some strength from one side to the next, we could be trading sideways here this morning for quite some time. Importantly, what do these levels really tell us? Well, we know that if price goes sideways, we're going to trade sideways. We'll scalp buying the lows, right? Selling the highs. But what about breakouts? I'm looking for a candlestick to close above 96.24. 96.24. That's going to be my high of that sell zone. Ideally, what I'd like to do is see price go into that sell zone, reverse, and then give me a close below 95.84. That would be a selling opportunity. So if we rise higher, a close above 24, I'm buying up to 96.93. As we go lower, pretty much the exact same thing except flip it around. We go down to the trigger zone support now. Again, ideally, I'd like to see it go into this support level, and then when it leaves, I'm buying a close above 95.39. I will take a partial profit target off at 95.84. If we come out the trigger zone buying, I will leave a runner on for 96.93 because you know we're talking about crude oil, and you know this thing loves to take off without giving you any heads up. So again, with this upward trajectory, with this upward trend, if we do go into the trigger zone, test these lows, I will wait for price to exit that trigger zone. A close above 95.39 will get me in long. Partial profit target at the sell zone. Runner profit target 96.93 at the zone above us. Furthermore, if we fall lower and we close below this line in the sand, 94.85, 94.85 is my signal to get short. I'm going short here. Depending on when this triggers, we will definitely want to keep an eye out for that trend line there. That trend line will make an excellent partial profit target. Final profit target on a runner, 93.60. You'll notice this to be a very narrow buy zone down here at 93.60. The narrower the buy zone, the easier it is for it to be run over and broken. So if you see those narrow buy zones, don't be afraid to take a partial profit target off at the trend line and see if we can let that final target run. And I'll go in and I'll grab a Fibonacci-based retracement setup, right, and look for it around that 93. So if we go in and look for a runner target here, just take out some basic Fibonacci, we'll notice here 92.81, 92.81, that's going to be an excellent runner target. All right, so our runner target, since we have that little teeny tiny buy zone down there at 93.60, again, if those bears take control, I'm short with a close below 85, partial profit target off the trend line. I will look to see if we get a bounce off of this 93.60. That will get me out of the trade. But ideally, though, we should probably see it blow right through that 93.60. You might be asking, so why do we even care about the 93.60 then? because we would want to know if it does stall and then reverse, that would be our sign to take our money and run out of that trade. Alrighty, so daily chart tells us two-way, 4-hour chart tells us two-way, 60-minute chart tells us, oh hell yeah, two-way price action. Nobody's in charge. I won't even open up the 30-minute. You don't even want to see the 30-minute. This is the chart your mom warned you about when you were a kid, right? This chart, look for those fake out breakouts. 30-minute chart, right? We go up, wait for it to fail, sell it back down. We go down, wait for it to fail, buy it back up. Now, notice how I'm saying wait for it to fail. Remember, the biggest mistake that we make as new traders is trying to predict. So this is one of the key things that we teach in our trade room. I'm not just putting a sell order at these sell zones. You're asking to get run over. Okay, there's nothing we can do to predict which one of these sell zones is going to hold. All we can do is react. We wait for one of the zones to hold, and when it collapses, we got them. Right? I'm not trying to predict that reversal. So again, two-sided trading. Price goes down to 95, wait for price to bounce going higher. I'm looking for a close above 94.99, and I'm buying. Price goes higher. We test 96.11. A close back below 96.11. I'm selling short. Be very careful not to enter into trades in the middle of this range. Sideways, sideways, two-sided. So far, our anchor charts have confirmed we have no idea who's in control right now. Let's see if our VIP chart. This is a 5-minute chart. This is one of my most important price levels. That's why I call it my VIP. The very important price levels, the VIP chart. As you can see, this completes now our top-down approach all the way from the daily charts, which were telling us sideways. Now, look at this 5-minute chart now. It confirms the exact same thing. First of all, the biggest clue we get is this price wedge. You can see the price wedge. The price wedge always going to confirm for us two-sided trading. Lower highs, higher lows, consolidated price action, range-bound trading. That's the first clue we get. Second clue we get is this very narrow and, as you can see, consolidated London trading session. The London trading session moves from 3 a.m. until 7 a.m. Now, what we will use this for is we will use this as a huge clue. First of all, the London trading session is extremely useful. I'm going to project up a reversal zone above us. With the two-sided price action we're seeing across the board right now, I'm going to expect a fake out breakout with new higher highs. Scenario 1, we push above London's highs, we chop sideways, and when we re-enter going lower, I'm getting in short to sell the highs. Target will be all the way back down at London's lows. Second scenario, price goes through, closes above the London reversal zone, above 95, 98, I am buying. So once again, if price rises, I have one of two scenarios. Scenario 1, it's a fake out breakout. I will sell the close below 95.83. Scenario 2, if price rises, price keeps on going. We get a breakout, a close above the 272. My target on this is 96.26. Once again, my buy target, my long target for the buyers, 96.26. If you looked at yesterday afternoon's price action, we nailed that call yesterday in both directions, up and down. So buyers, we're going to 96.26. That's my short-term target. If we keep on going, we'll most likely try to push our way all the way up to that 96.72, all the way up. Okay, my short-term target though, 96.26 on the buy side. What about the downside here, Joe? Well, you'll notice in the very short term, we actually just broke out and failed above London's highs. That tells me right now I am bearish, and I am going to be bearish down to the 95.60 area for a partial profit target. In the short term, I am short. I am bearish down to 95.60 with a runner target down to the London session lows at 95.28. Once again, bearish now, going lower down to 95.60 after seeing a test of the London reversal zone to the upside And again, that will lead to bearish sentiment going back into the range. Another scenario today. If we make it all the way down to these lows, I will take profit on my short all the way at the lows. I will do the exact same thing that I expect to see at the highs. I will look for a price reversal to buy these lows, and we're going right back up again. I'll keep buying and selling in this zone all morning long if it lets me. Just remember, though, we're not predicting. We're reacting. I'm waiting for price to actually get into that reversal zone. I'm waiting for a candle to close above that 95.26, and I'm buying now all the way back up to that London session highs. What about the scenario where the bears are in charge? If we see price enter the London reversal zone, a close below 95.13, 95.13, a close below 95.13, and I am selling short with a target at 94.83. 94.83. If you got a couple bullets in the gun, you might want to look at a partial profit target here at 94, 94.94, and then a complete profit target, runner target off at 83, 94.83. My ultimate short selling target is going to be 94.83, 94.83. Pardon me, 94.86, excuse me, 94.86. I'll make that correction here and put it up on the blog for you. So we've got our direction. We know we've got two-way trading. I'm predicting sideways, chop, and slop until we get a break either above and close above the London reversal zone, or a break below and a close below London reversal zone. That's what I'm seeing from my end. I'm just a lonely old day trader, though, in my home office. I want to thank Marty for coming out and joining me. I'm going to be buying lows and selling highs here. Marty, what are you seeing down there in the pit right now? Are you seeing some of the same, or am I seeing something wrong out here? How are we doing out there, Marty? Take it from here.
All righty, thank you very much, JJ. Good morning to you. Well, JJ, I'm seeing very similar type divergence across the board here. Well, first let's start it off by taking a look at first worksheet here I have planned out for us, and I'll just read it out to you guys. Basically, what we're looking at is, first and foremost, our risk-on, risk-off sentiment here. Those are my levels there first, and we'll get to those levels in a second. But first, we'll be looking at our risk-on, risk-off sentiment. Now, that's for today, May 7th. It says 6. But basically, you can see a bunch of those arrows are just giving a sideways divergence at the moment. So right now here, I'm looking at your dollar index, and we're going to first try to define risk-on, risk-off sentiment, right? So we see your dollar right now just kind of trading a little sideways at the moment. Again, we're lower on the day by about 20 points, or 40 points actually. 20 points, 40 ticks lower on the dollar index. So that really should be causing crude to trade higher. But right now we're looking at somewhat of a risk-on sentiment, but it's very low correlated at the moment. The euro is well up about 43 ticks or so. Dollar trades 82.18 even, euro 131.25. So right now here, we kind of see that divergence with your dollar and your euro really kind of not contributing too much to our risk-on, risk-off sentiment, but minor. So let's just look at crude right now. We trade 95.71. 95.71 is trading right now. We're looking at basically sideways activity here. Right now what we're seeing also in the RBOB, heating oil, they both trade in the same pit as crude, so we use these two markets basically as a leading indicator on the crude. The RBOB trading at 285.47, heating oil trading at the 292.08, both unchanged, virtually unchanged on the day, both very sideways. So let's continue down the list and let's keep on taking a look at our spreads now. Let's take a look at our calendar spreads. So we're going to be looking actually at Brent WTI and calendar spreads. So first let's start off with our Brent crude. We have 105.21 trading on the Brent right now. Again, holding levels above the 105. That would be promising for crude to be holding levels above the $95 level. Now, again, it's going to be like the same scenario as yesterday. I'm looking for a pit session open above the 95.50 level. And again, if we can get that pit session open above the 95.50 level, then we can possibly be bullish again like yesterday and just try to get back up towards the high of this range. Again, we have the ultimate high at 97.20. But again, yesterday's pit session high at 96.24, but we're going to get to the levels in a minute. So The Brent WTI spread is actually pointing lower this morning so far. I see a little bit of backwardation in the spread. Again, when the spreads widen up, we tend to see the market trade lower. When they tighten up, the market tends to trade higher. So right now, the Brent WTI spread trading at 950 right now. Again, it's probably 20 ticks or so in backwardation. So again, simply meaning when we're in backwardation, we're going to trade lower. So again, I got 950 on the Brent WTI spread. Counter spreads, they're pointing actually higher, believe it or not, right now. I'm looking at your June-July, which is the MN, that's June-July contract. I got about 23 cents on that spread. Looking at June, the Augie, 25 cents. June, the SEP inverse of 07. So you can see rather tight on the spreads, pointing in a little bit of a higher direction. The crack values right now, they trade pretty much sideways. I got 89.94.50 on our cracks, and basically they're telling us sideways to unchanged activity. So as JJ said, we're wide open here. We're very sideways this morning, and usually every single morning for you we have a direction. This morning we really don't have much of a direction. Again, we have a game plan of attack playing both ends of the market, which is a very simple way to put it. You can play both ends of the market. Obviously, as we mentioned, buy the high, sell low of the range. But at the moment right now, we're really looking at a lot of sideways activity and indecision. Now, one key fact that we had yesterday that was moving prices, geopolitical news that hit the board. Again, that geopolitical risk premium that we're all concerned about. The concerns in Iran, the concerns in Israel, the concerns in North Korea. They were basically fueling the market to the upside yesterday. But right now, we can expect somewhat of a fade off that, because the thing is, that news is basically in the past now. We're not going to be so concerned about it unless something big happens again and the news wires are lit up today. Now, just give me 1 second while we just pull up a couple other indications. Again, we're looking at supply-demand differentials by looking at the spreads, of course. Which we already have looked at the spreads. And again, they're really kind of giving us that indication that we could see a mixed open. All right, so economic data scheduled for release today. We don't have much of it at the moment. Again, we're looking at now your economic data scheduled for release. We don't have anything that's going to be potentially market moving in a big way today. Now let's take a quick look now at your levels. Of course, as always the case, we're going to be looking at volatility as well. So we mentioned higher volatility in these lower strike levels. Yesterday, vol was extremely bid in the pit. We saw the 95, and then we also larger trades that we've seen in the pit. We saw the 95 call trade over about 3,000 times. And then we look at that 93 to 94 put spread trade about 1,000 times. And the individual strike itself, the 93 strike and 94 strike to the put side, as they buy the puts, they only traded 1,000 times. So again, majority of the volume is still in the calls, the 95 call, in the short-term daily option, weekly, and monthly. So that gives us a little bit of a promising bid. But again, it really all does depend where we open up today, and that 95.50 is going to be a level we're trying to look above. So right now here on your crude, I have open interest currently stands at 269,952. Once again, it's 269,952. Now overall, lower from yesterday's open interest reading, but that will give us somewhat of a bullish indication. But, I say but, there's a lot of open interest starting to come into this June contract, believe it or not. I mean, the July contract. A lot of open interest coming in July. Okay, so volatility sits at about 26% in the implied. Again, the OVX trades 25.16. Keep in mind there's higher volatility in the lower strike levels. Again, that would be an indication for lower prices. So we're looking at yesterday's pit session levels here. So first and foremost, let's look at this high from yesterday. I have 96.24, your pit session high from yesterday. Your pit session low at 94.85. So again, 96.24 your high, your low, 94.85. We closed and settled the day quite near the highs at 96.12. I had a net change yesterday of $1.22 and a range of about $1.40. With volatility sitting at about 25% yesterday, we did see decent movement associated with the market. But again, due to the geopolitical risk premium, you're going to say, Marty, that volatility, 25%, is pretty high. Why don't we go lower? Well, the geopolitical risk premium in the market made us trade higher yesterday. And now we can expect somewhat of a fade off that as vol is getting firm this morning, very firm at about 25 to 26%. Right now I got the implieds at 26. The OVX is not open yet, but I have the future vol index, implied vol, at 25.46. So, ladies and gentlemen, let's talk about your daily pivot today. 95.74. 95.74, your daily pivot for the crude. I got some resistance above at 96.63, 96.96, and 98.18. and really 97.20, and then 98.18. Support down below 95 and a quarter, 95.24, 94.52, and 93.30. And again, the highest strike levels in the pit were the 95 call and that 94 to 93 put spread to the downside. So they sure up both sides, as you can see in the options ring. A little bit more interest in the calls than the puts, but again, they sure up both sides. Real quickly, let's just look at RBOB and heating oil. Again, as I mentioned, the price levels, let's just look at the high and low from yesterday's pit session and our range yesterday. High in the RBOB yesterday, 286.93. Low, 280.51. 280.51 low. Again, we had about a 6.5 cent trading range in the RBOB. Decent trading range whatsoever. We see volatility starting to come off just a bit, around 25% right now. Open interest currently stands at 91,416. Heating oil, high yesterday, 292.25. Your low, 287.19. And again, we have about a 5 cent trading range yesterday. Right now, this morning here, we're looking at heating oil trading at 292.23, which is pretty close, obviously, to the settle of yesterday. Open interest currently stands at 101,008 even, 101,008 even. And ladies and gentlemen, we're looking at volatility around 18%. Real quickly, looking at natural gas, we have a very, very, very simple plan of attack on natural gas. We could expect somewhat of a sideways range. Again, this morning right now, I'm looking at Natty Gas, and we're watching here it trade in the June contract. Of course, we're looking at June on the natural gas. Right now, ladies and gentlemen, it's trading at 297.60, and if we can get an open below this 397.60, I might have said 2, so it's 397.60. If we can get an opening print below the 397, simply put it, we'll be looking to hit that overall target of 393 and 387. Again, those are going to be our targets to the downside. Targets above to give us some assurance to the upside. We have to break above 407 and 410, and we can make it up to the 421, which would be the 50% retrace of Thursday's high to low. So very simply put it in the natural gas. Real quick, let's rock and roll through these levels here. Yesterday's pit session high, 405.60. Your low, 397.10. We close and settle at 401.20. We have a net change of just about 20 cents to the upside. We have an 8.5 cent trading range. Today, your daily pivot's going to be on the natural gas at 401.30. Again, 401.30 is going to be your daily pivot for today. Got some resistance above at 405.5, 409.80, and 418.30. Some support down below at 397, 392.80, and 384.30. Again, like I mentioned, we have that 393 level that we're going to be watching out for as major support for weeklies. These are just dailies. That's going to be a big weekly level of support. And then we also have the 386, which is going to be a big level of support. Again, those are just daily pivots and daily levels. So real quickly, again, in your natural gas right now, I have open interest, ladies and gentlemen, currently stands 198,421. Ladies and gentlemen, your implied volatility is just about 33% this morning, which is quite sideways and mid-range. In the pit yesterday, we saw the 425 call, the 420 call, the 410 call all trade over 1,000 times in those strike levels. And believe it or not, on the put side, we see it trade 5,000 times. That's right, the 4 even put. June, 4 even put 4,000 times in the pit. So they sure up the downside on that trade as well. Now, that's really it, ladies and gentlemen, here in terms of our levels, and we're going to throw it back over to JJ now over in Los Angeles. Guys, I'm down here on the trading floor here. We're going to be open in just about an hour. Come join me at 8:50, ladies and gentlemen, and we're in a rock and roll here this morning. Again, I hope you guys have your morning prep. Game plan of attack, very sideways trading market this morning, and again, we have to play both sides of the market waiting for a breakout.
Boy, great job, Marty. Thank you so much for coming in and joining us here today. Hopefully we'll get a little bit more. Boy, from just listening to you today, it sounds like there's a lot more people on the exchange there this morning. Have you noticed the volume of people in the pit have improved since yesterday's kind of hangover Monday?
Yes. So far here we have gold pit session open. We have the metals opening up in just under 15 minutes actually. We open up
awesome.
8:20, and I can already see more traders here on the trading floor in the precious metal futures products. Some crude oil traders popping their heads in about an hour before the open. The cafeteria looked filled this morning, so looks like here we'll have decent pit population so far this morning.
Great feedback. Guys, Marty Errico, live from the Traders Audio pit from the NYMEX Exchange with the Traders Audio team. Thank you so much, Marty, for coming in and joining us. And as always, just what a unique way of taking a look at this. I talked about sideways trading. Marty saw the same thing. Don't forget to buy those lows, sell those highs. Come out and join me anytime you'd like in our live Trader Mit School of Trade. Don't forget to register for Marty's broadcast. It starts 10 minutes before the opening bell at 8:50 a.m. Eastern Time with Traders Audio. I'm JJ at School of Trade. That was Marty at Traders Audio. Thank you all for coming in and joining us here this morning. Every morning, 7:30 a.m., we take a half an hour. We go from the screen to the floor. From Los Angeles, signing off for now. We'll see you guys tomorrow morning, 7:30 a.m. Adios, amigos. Bye-bye for now.